Trading account. Dear students, today let us learn about trading account. The next step after the agreement of trial balance is the preparation of final accounts, which are trading account, profit and loss account, balance sheet and funds flow statement. The debit balance of trial balance would represent either assets or losses, and the credit balances either liabilities or gains. All losses and gains would be grouped together under one account called the trading and profit and loss account, which would serve to show the resultant profit or loss made in the trade. All assets and liabilities would be collected under a separate statement called the balance sheet, from which would be ascertained the exact financial position of the concern as at the date of balancing. In ascertaining whether any particular item should appear in the profit and loss account or balance sheet, the following very simple rules shall be applied. 1. The debit balance of any account is recoverable, it is an asset and will appear in the balance sheet. If it is not recoverable, it represents an expense or a loss and will find its place in the profit and loss account. If the credit balance of any account is payable, it is a liability and will appear in the balance sheet. If it is not payable, it is a gain and will be shown in the profit and loss account. The profit and loss account of a trading concern is usually divided into two sections. The first section is termed the trading account, which is so framed as to show the gross profit. The gross profit as shown by the trading account is transferred to the second section, which is the profit and loss account. Gross profit. Gross profit is the difference between the cost of the goods that have been sold and the proceeds of their sale, without any deduction in respect of the expenses of distribution and general administrative and establishment charges. In the trading account, therefore, it is necessary to include all items of expenses directly affecting the cost of the goods sold. The following usually appear on the debit and credit side of a trading account. On the debit side, a stock on hand at the commencement of the period. 2. Total purchases made during the period less value of returns outwards. 3. Direct charges such expenses as add directly to the cost of the goods purchased, such as freight, duty, clearing charges, dock dues, carriage inwards and cartage. On the credit side, the total sales made during the period less the value of returns inwards. 2. Stock on hand at the end of the period. The excess of the credit total over the debit is called the gross profit, that is, the excess realized on the sales over the purchase price of the goods sold and is transferred to the profit and loss account. Form of a trading account is given below. Trading account. On the debit side, to stock at commencement, to purchases less returns, to freight and duty etc., to carriage inwards. On the credit side, by sales less returns, by stock at the end, by when the sales credit side is more than the debit side, we have to close this account by transferring the gross profit on the debit side to gross profit transfer to profit and loss account. We have to total both debit and credits. The following items that appear in the trading account need to be most carefully be noted. Purchases. This item should include cash as also credit purchases of all goods bought for resale during the trading period. The gross purchases will appear in the inner column and the net amount after a deduction of returns outwards in the outer column of the trading account. It is incorrect to show returns outwards on the credit side of the trading account. It should be seen that all the goods entered in the purchase book and the remaining unsold are included in the closing stock. Sometimes invoices are received in advance of goods, and if the corresponding goods have not arrived before the close of the trading period, neither should such invoices be entered in the purchase book, nor should be the goods taken in closing stock. Where, however, the goods purchased are in course of transit, it is necessary to bring these into account by debiting goods in transit account and crediting the supplier account. The former account will appear as an asset in the balance sheet and the latter account will represent the liability incurred. Purchases of goods by the trader for his personal use should be charged to his drawings account. Sales. This item should include all cash and credit sales of goods effected during the period. The gross sales should appear in the inner column and the net figure after deduction of returns inwards in the outer column on credit side of the trading account. It is incorrect to show returns inwards in the debit side of the trading account. Amount realized on the sale of an asset should be credited to the asset account in question and not to the sales account. Freight. Freight inwards, that is, freight paid on goods bought, is included in the trading account. Freight outwards, that is, paid on goods sold, is shown in the profit and loss account. Freight paid on the purchases of plant and machinery, furniture, or any other fixed asset should be charged to such asset account as it would add to the purchase price of the asset in question. Carriage. Carriage inwards appear in the trading account and carriage outwards in the profit and loss account. Discounts. Trade discounts on purchase or sale must be deducted from purchases or sales in the preparation of the trading account, while cash discount must appear in the profit and loss account. It is always advisable to show the item of discount allowed and received separately on the debit and credit side of the profit and loss account, in order that the losses as well as gains under this head may be distinctly seen. Duty and dock charges. If these relate to purchases, they appear in the trading account. If paid on acquisition of fixed asset, they should be charged to the asset account in question. Packing materials and charges. When goods have been packed in a special way to comply with the order, or when special packing is required before the goods can be considered ready for sale, these would be charged to trading account. In all other ordinary cases, these should go into the profit and loss account. Consumable stores. Consumable stores account is debited with purchases of engine oil, cotton waste, and any other stores as would be consumed in the course of manufacturing. From time to time, as these stores are consumed, journal entries are passed debiting stores consumed account and crediting consumable stores account. Closing stock. The item of closing stock does not appear in the books and is therefore not included in the trial balance. In order, however, to ascertain the true results of trading at the end of any financial period, the trader has to take stock of the goods unsold and bring it into account after valuing properly. The entry for so doing is to debit stock in trade account and credit the trading account. It should be clearly understood that only the goods remaining unsold at the end of the financial period and which are the property of the trader should be treated as closing stock. Thus, goods received by him to be sold on consignment or on sale or return do not form part of his closing stock. Stock of stationery and advertising material, if any, should not be mixed up with the stock in trade but should be shown separately as an asset under its distinct heading. Let us solve an illustration from sample account balances for trading account. Illustration. From the following particulars, prepare trading account for the year ended 31st March 2021. Stock as on 1st April 2020, 21,000. Purchases 48,000. Return outwards 3,000. Wages 16,000. Carriage inwards 7,000. Sales 1,01,000. Return inwards 5,000. Stock as on 31st March 2021, 24,000. Let us solve this illustration. Solution. Trading account for the year ended 31st March 2021. Debit side particulars and amount, inner column, outer column. On the credit side, particulars and amount, inner column and outer column. On the debit side, we record opening stock as 2 stock as on 1st April 21,000 in the outer column. 2 purchases 48,000 in the inner column. Less returned outwards 3,000 in the inner column. Net of 48,000 minus 5,000. Net purchases is 45,000 in the outer column. 2 wages paid 16,000 in the outer column. 2 carriage inwards 7,000 in the outer column. On the credit side, by sales 1,01,000 in the inner column. Less returns inwards 5,000 in the inner column. Net of sales less returns 96,000 in the outer column. By closing stock 24,000. When we balancing, we got a profit of 31,000. This is a gross profit, and this should be transferred to profit and loss account by recording on the debit side to gross profit transferred to profit and loss account 31,000. When you total up the debit side credit side, it is matching 1,20,000. In the next lecture, we will discuss about manufacturing account.